Welcome and hello YouTube. Hope you guys are doing good. Hope you had a good weekend and a good week last week. It wasn't as crazy as the week before. We didn't really have, the week before we had all the tariff stuff. Last week wasn't that insane. We had a lot of obviously fundamental, but it wasn't, considering the amount of news, like on Tuesday, for example, I'm pretty sure Tuesday we had like no volume at all. It was like very, very quiet considering the amount of news. So, I'm not complaining. But yeah, it's just a bit of a slow one for the first half of the week. Just grab this. Okay, so we got YouTube, we got Discord. Let me send this out. Hello Tux. Hello. Sec. Send the YouTube out. Bam. Ping. Boom. Right, okay, we're good. We're going. Looks like a nice week. I couldn't tell you because I haven't actually had a look yet. Oh yeah, we got the elections. So if anyone's holding Euro trade over the weekend, good luck, because that's going to potentially be a fun one. My stream is my camera lagging like shit for everyone? I think it is. Oh yeah, it is. Ooh. There we go. We're back. That was weird. Yep, we're good. Right, anyway, so yeah, your election, so German election, sorry. So we'll see what happens at market open. I don't think it did anything on Friday, did it? No. After London close, we had a little pump and pullback, but nothing crazy. Monday, chilling. Tuesday, again, that's not really anything crazy. Oh my god, this is really good. G20 meetings can do the odd 20 pips in and out depending on what's said. Bro, it's lagging again. Holy fuck. Is it because I have so many tabs open? Let me close some stuff. Market breakdown. Bro, what else do I have open? That's it. I literally have 3 Google Chromes, Discord, and OBS. Holy fuck. Why is it so laggy? That's weird. Going to be an aggressive week. Oh my god. Gold 1 hour this week is going to be beautiful. Sorry for the lag. We're just going to have to put up with it for a second. I don't know if it's because I've not got this open. Let me keep this. I'll keep this there for a minute. That is weird. There we go, it's back to normal. Okay, we have unemployment on Thursday, which, yeah, that's fine. Oh, yeah, it's a beautiful week. Okay. Absolutely beautiful week. So let's get into it. Okay, so did anyone take anything last week? Tux, I know, Lytix, you said you haven't taken anything. Did anyone else grab anything last week or not? I think I just had... I took a 1 hour gold trade. I think I took 2 actually. 1 or 2. I missed quite a few as well. I'm fucking out, Morgan. And Euro NZD, I also missed that. That was this trade, which as you can see, missed, worked, missed, and worked twice in a row. So bit of a bummer. I didn't really want to get much higher of an entry, to be honest. I could have maybe gone for the candle close. I guess that was a little bit of a conservative entry. The actual zone was only 17. But even so, if I would have entered at candle close, I would have most likely missed entry. So I guess it is what it is. That was bound to be a miss. Maybe just restart this. No, it's not Discord. It's the actual OBS recording thing. Wouldn't entering on a retracement, maybe by noise, just make more noise because of your liquidity making a move. A potential reversal. I think liquidity issues only exist on large live accounts. You got to explain that like I'm a child because I don't have a clue what you're on about. Entering on a retracement made by noise. Made by noise? What do you mean? Because of your... Made by noise, just make more noise because of your liquidity making the move a potential reversal. Don't know. Does that make any sense to anyone else? Because I'm a little bit confused there. Tux, you took 3 trades. Let's have a look. Oh shit, you fucking caught it, didn't you? Of course you did. Of course you did. Okay, that was a really nice trade. Well done. That was a beautiful trade. Second one. Pound card, yeah. What was that? Wait. Oh, was that a 23 fib break retest? Jesus Christ. That is hella aggressive. Damn. It literally... Wow, okay. So did it make that high and then come back down? We just... Had timing too. Oh, let me go on Damn, that is aggressive. Let's investigate. Shit me. Tux, that is crazy. Okay. So I'm guessing you're looking at this level as well, right? This one. So you've got that yeah, that. And you went for that. Ooh. Okay. I mean, fair enough. It worked. That is yeah, the lower one looks a bit more cautious. I mean, there's aggressive and there's aggressive. That's crazy. But yeah, fair enough. It worked. So, I mean, we can't say it's a bad trade. What's this? 4 hour? That's the fib you had. Wait, so it was a 4 hour trade. Sorry, this is absolutely crazy gold charts. So you drew the fib of that. Ours are fucked. Capital Com. Our fibs are completely different. Yeah, yeah, that's why I was going to say mine just did not line up at all. Wait, what? What on earth are you looking at? Wait, the 19th. Oh, that. Yeah, see my fib, I mean, yeah, it lines... Oh, wait, shit, no, you're... Oh, no, I see it, I see it. So is this level here? Price created a new high and you went for that. Okay. So let's say you would have entered here. Probably about 50 stop loss. It's 4 hour. I would have went for like max 50 stop loss. 50's pushing it a little bit. No. 50's okay. It wouldn't have worked. You got that break retest. So it would have worked on 40. 40's tight. Yeah. Okay. Did you... Okay, you got 40. Okay, fair enough. Yeah, nice. Well, that was a good week. 3 trades, 3 wins. That's amazing. We're also having some nice setups for the upcoming week. Yeah, I'll go over that now. And I'll go over gold in a minute. So, starting off with Euro Aussie, nothing happened. Absolutely boring. Nothing at all. We did have a tap into this, which, I mean, I wasn't a massive fan, to be honest. I don't think we had anything with it either. Did it have... Yeah, literally nothing. I feel like we had EN alignment or something. Okay, EN did tap the low as well. 10 o'clock? Yeah, 10 o'clock. So we had EN alignment. Was the GA? No. Okay, so it's EN and EA. Both tapped into that level, but again, I'm not a massive fan. I'd rather just wait for this one. This is the 61 fib break retest. Ignore that. One sec. There you go. 61 fib break retest, and you got this as the backup. And apart from that, I'm not a massive fan of that. I think I'd just rather wait for this down here. Wow, JJ. I see how it is. I was actually waiting in the voice chat for like, I think 15 minutes and no one turned up. So I decided to leave. Yep, that's the excuse. Do you see what time the mentorship was? GG Communities bot. Okay, I see. EA nice sells. Oh, come on. Yeah, that one. Yeah, that one's beautiful. Yeah, I like that one. This one's clean. That one, I haven't really checked. I'm guessing that is a beautiful fib. If we obviously break this low, We need to push a tiny bit lower, and then yeah, that'd be beautiful. How low can we go? How far wide is that? 30. Okay, so we don't want to push too low, but yeah, that could be nice. Either way, like if we have alignment or timing or something with that, that would be nice. And then the 61. Oh, that's the one you're looking at. What? Oh, I'm stupid. Ah, I was in fucking backtesting mode. There we go. 61's beautiful. Never mind. Hello, Cam. Hello. Yeah, it has been... Jesus, it has been a while. A while. Yeah, sorry about that, Lytix. I'm just a bit slow. So yeah, that's all I'll see on your Aussie. I mean, some people will go for like the aggressive 50 at that level. But yeah, no, I'm just gonna wait for that high. Right, on to the next one. We're not in backtesting mode now, thank God. So yeah, EN was a miss, unfortunate. There's that level, which I don't think really has anything. Tell a lie. 61 fib. And that is about 20 pips wide, so that is completely valid. I'll set an alert for that one. The next buy level, this trend line I'm not really bothered about anymore. We did have... Oh, there was that EMA, because he had like this, I think it was. Shit, never mind, it didn't line up. Oh, that tapped perfectly. Oh, no, I can't remember what it was. Never mind. Okay, I ain't reading that one out, JJ. Nice, Cam. Nice. And you got your own strat. Okay. How's it going? How long have you been trading it? And like, what is it based off? Is it like ICT related things or volume, or is it Forex futures? Like, what's it looking like? Yeah, EN, I don't really have anything really. I'll just wait for a break of this and a tap into this with the EMA. That's a valid trade. Doesn't even need to be a backup, to be honest. Great. There we go. So that's it. Literally the 61 fib, 200 EMA, done. That's a valid trade for me. So that's nice. Nothing else there. Would anyone take like this wick? Just an 80. Don't know if anyone will go for that. Oh, trendline fit. Okay, there we go. That is an aggressive trade. That, yeah, the 38. It'd have to tap. I mean, it'd be a lot nicer on Tuesday, but I mean, potentially Monday. Yeah, that is a little bit aggressive, but again, could work. Could be really nice. Doing it for about a year. Forex, commodities, ICT, fair value gaps, LS, liquidity sweeps, I'm guessing that is, and BOS. Okay. All right, nice. Yeah, it's good. Nice. Yeah, very nice. FG, fair value gap. So an imbalance. It's the same thing. So, I mean, you know what an imbalance is, obviously. It's like these little bastards. Oh, right, okay. Okay, never mind. Yeah, ignore me. GA. Does anyone have anything on GA? Would anyone go for this level here, this wick? You do. I mean, I don't see anything apart from this and this. I mean, you can maybe go for that if it was aggressive. This is no chance unless we break this high. I guess you could go for this because it's pushed up, broke this low. I mean, yeah. But I would not go for that. We're literally stuck in this little zone here. The highs and lows of the consolidation is in this or this tiny one. Oh, I don't even want to look at this chart. Well, you'd go for that. You'd go for that now. Or not now. Okay. Okay, fair. Then what do you go for that at 61? Entry level 61 fib. What 61 fib are you drawing there? Are you drawing a invalid 61 there, Tux? No fib. No fib. What's that 61F then? Yeah, I see, I see. So you have absolutely nothing there, just a level. Are you waiting for like, would you take it just on its own, or are you waiting for like alignment or something? I mean, I guess if you saw like, I mean, we're gonna have to go lower time frame here, but if you see like a clean breach of this, which it's already not, then yeah, sure. But I mean, it's already kind of reacting. Yeah, maybe timing, but again, I would rather wait for the safe levels personally. So I don't have anything here. This is the classic scenario where we have 2 levels. So for this one, I'd need this bad boy right here, alignment or timing to take that. And if we don't have that, I'll wait for a breach of this and go for this one. And you have the EMA just there, which is nice. So yeah, that's GA. We're just waiting for a breach of either this or this and see what happens. Because of the nature of my entries and the time for,
no?
Okay. Because the nature of my entries and time frame is mainly suited to that guy. There we go. Let me read that for the last time. Use it mainly suited for swing trading. Oh, okay. Interesting. I need to follow my entry model though. What's this? Oh, wait, what are you trading, Mike? Is this your own thing or what is it? Yeah, you got a nice little level there. Or is it my stuff, EMA levels, and looks kind of levelly? UJ got a weird zone. Well, yeah, we'll go over UJ in a sec. For GN, again, this is a bit of a shitter. It's the same as GA, where, I mean, not the same, but we just got this shitty zone. I will take this one now that we've created this level. If we now see, I mean, it's kind of reacted off that level, but if we see a strong breach straight into this and we have like timing or something, then yeah, 100% I'll go for that. Breach is a bit awkward. I mean, if we do see a strong push, then it's 150. It's not that bad. But I would much prefer timing and alignment. One of those two. And yeah, sure, I'd go for it. You do have that EMA, which is, it's 50 away, that's chilling. And this could obviously see a breach of this. So if we see a strong push, breach of this level, then this one I would take regardless, no matter what. The highest push trend line. Yeah, let's have a look. I mean, you got this trend line. Let's just scoot it down a little bit so it lines up. Is that what you mean? Or are we talking? Yeah, okay, you're definitely not talking anything like that. You also have this. God, don't we love trend lines? Yeah, we got that. I mean, it doesn't really line up with anything at all, so I'm not too bothered. And this doesn't really align with anything either. So yeah, I rarely find like decent trend lines that actually line up with stuff. Yeah, so that's it. We're just waiting for a breach of this level, hopefully, with a nice little 4 PM or something. I'll go for it. Let's have a look. Is that drew correctly? Yours is if I actually draw mine accurately from this to this, I feel like yours is pretty damn high. It's not even touching. You can see it's not touching. I doubt that'll line up. Plus, to be honest, I'd rather just do that, and I'd count that as a tap anyway. So yeah. Leon, your strat is basically trend lines, right? No. It's no. It's like basic support resistance levels, mixed with a few different confluences, such as like alignment, super support and resistance. That's it. Souped up support and resistance, but for the hardcore fuckers, that's what it is. Yeah, it's like basic daily levels mixed with EMAs, fib, alignment, like session close and opens. Stage 2 remap of support and resistance. There you go. That is, there we go. That is exactly what it is, yeah. Beautiful. Season 2. That's it. It was super, super basic. Like the most retail strategy you've ever seen. I mean, every strategy is retail, I guess. Okay, GJ. This shit has nothing as well. We had quite an... Did you go for this, Tux? If you're going for your aggressive ass trades, did this... Well, so let's check that fib. Oh, shit. Yeah, that's fine. That's fine. 50. Oh, it was news. Shit, was it? 1 a.m. on Friday. Okay, interesting. Never mind. That was a fucking nice tap. I don't know why it seems way more complicated. Like I found my ICT strat a lot easier. What, you think this looks complicated? Literally, all you do, if I go back, right? Here we go. To say, I'm just going to go back here without seeing it. Oh, fuck. All you do is mark out your levels. So, for example, here we have 1, 2. You got that shithole level here. I mean, we're going to mark out these just in case. Mark out your levels. Find where your EMAs are. So here, that's a valid trade for me, done. That there with the EMA and the level, that's a valid trade as long as obviously market conditions are right. It's a bit awkward for stop loss. No, it's not actually, that's fine. You can draw a few trend lines, fib, all that shit. So, I mean, the fib's probably what, here? Yeah, fib's been done. There is no sell fib really. So that is the only thing you see. So that is a valid trade. I'll take a sell from there as long as there's no news or anything weird happening. And if we have like alignment, so we're looking at GJ. So just me, or is that text fucking huge? Ah, zoomed in. And yeah, so if we had like alignment with like USD JPY tapping a level at the same time, or if like, you know, those pound flows and pound was really strong, I'd look at GU. And then you can look at like DXY if it's USD driven, and then DXY affects UJ and UJ affects GJ. So it's just finding like basic market correlations. Or you can look at the Japanese stock market depending on what's driving it. And if like Nikkei hits a level, so for this you need pound weakness, JPY strength once we hit this. So from here, we're looking at JPY strength, which means you'd be looking at Nikkei to hit like a strong buy level at the same time as this is hitting a sell level. So it's just like very basic levels mixed with a few things. Yeah. See, for me, I would aiming for a swing long right now based off my strat and GJ. Do you take into account like fundamentals or anything, Cam? Okay, especially trading JPY pairs at the minute is pretty crazy because we're getting fucking switches every 2 weeks from risk on, risk off, all that shit. Tariffs, no tariffs, Trump tweeting, Trump not tweeting, Kanye tweeting. Anyway, yeah, JPY 192.2 I saw. Was that Tux? You think of the zone at 192.2? 192.9. Yeah, it's fucking beautiful. I'd prefer a break of this though, or at least a tap into this level and then a revisit into this. But I guess it's valid anyway because we created this low, broke the low, blah blah blah. So yeah, I would go for it, especially with the 2 EMAs. If we had like, I mean, we've got the psych level at 0.8 as well, or if you want to go round numbers. Yeah, it's really nice. But then we could potentially get, could we get a fib if we broke this by a little bit? Yeah, but nothing crazy nice. We'd need a push pretty damn low. Yeah, never mind. Trying to look for a trend line as well. Would that line up? Is that even a valid trend line? No. So yeah, I mean, I'll just take it with the EMAs, to be honest. That's a nice trade, yeah. I like it. mark that out. Don't you get wicked out? No, that's why I always cover the level. So I'll never. So yeah, this is one like rookie mistake when you're going for like basic arse levels. I'll always make sure I have like roughly 15, 20, maybe even 25 pips above the level to give it a little bit of slippage, because as you can see, most of the time, not most of the time, a lot of the time, sometimes you'll see beautiful taps, but quite a bit. Let's find an example. When I need an example, there's fuck all examples. Well, I mean, you know what a fucking liquidity hunt, whatever the shitting called. What's all the ICT terms for like stop hunt, liquidity grab? Yeah, hey, wait, grabs the high, does a little bit drawdown, takes people's stops, and then does the move. Whatever it's called. It was weird. Probably about 50 terms for it. But yeah, that's why I cover a tiny bit above the high. And depending on what pair, I'll cover more or less, depending on the size of the zone. If we have news, if we got like a strong move in, then yeah, all that then helps me pick how much, you know, how much room I give it. Oh shit, sorry Cam, I didn't see that message. Go to the 201 points. Oh shit, sorry. 201.613. No, 19. Fucking hell. Okay, we're just going to skip that because I've kind of already forgot it. Do you have an entry model? Kind of, yeah. It's just entering around the first confluence. Again, it's... don't know what that's for. It's dependent, again, on the zone and the pair and the market conditions, but majority of the time, I'll base it around the first confluence. So, like, for example, this level, you have 3 confluences. You have the level, which is that. You have this EMA, and you have that EMA. My entire zone I'd be looking at is this. So when it comes to like misses, I'd be considerate of the entire zone, and I draw zones from the wick to the level. It's like same with this one up here. I'd keep an eye out on this entire level, because if price taps into this level and does a move, a decent move, then I'll most likely cancel this. Unless we see, for example, if the zone is like pretty damn big like that, and we see a move from this, and then we have a really strong move back into the top of the level, like the extreme of the wick with alignment or something, then I'd go for it again. But when the zone is a little bit smaller, I mean, this isn't, yeah, I wouldn't re-go for this zone. If we saw a tap into this and it did a move, I'd cancel. But for example, for this trade, I would enter around the first confluence, which is the EMA. I'd go a few pips before, and I'd cover everything. For this, 50 looks pretty appropriate. For GJ, most of the time I go 50 for any JPY pair. Sometimes it's 40. But for example, if our zone was tiny and the EMA, for example, let's say this was no longer there and this was the zone now, I wouldn't then go for an entry up here. I'd still go for an entry like 10, 15 pips below type thing. I wouldn't go all the way up here, because what is the chances of it literally tapping the very extreme of the level? So again, it's dependent. It's just through experience, placing trades and seeing what the fuck happens. But yeah, that's a really nice zone on GJ. 191.75. 191.75. Oh, you're going for this? Okay, fair enough. Trend line covered, but likely entry in it. Look at this sweep. They hunt my demo account stop loss. Oh fuck, I need to catch up on chat. Fuck. Okay. Let me open your chat now. Yep. For slightly smaller 61. You got that level as well. Oh, you're looking at that above level. Wait, what, this one? Is that one? Oh, you're looking at that from... Yeah, you're looking at this zone, aren't you? And I'm guessing also that one, surely. With that trend line. This is... Okay. Oh, I mean, this could line up with a few things, to be fair. I don't know if it was that trend line. It could have been. Roughly that trend line. No, probably not. It could have been that big trend line. No, it's not. Anyway, yeah, you got a few little scenarios here. for it to line up with this, it'd be next Monday. Yeah, that's not going to happen. And for this one, I highly doubt that's going to happen as well. So I'm most likely not with the trend line situation. For this, I would need, again, alignment or timing. Very basic. We're not seeing a breach of anything. So yeah, literally just alignment or timing. Maybe UJ or, I don't know, DXY or, well, anything, obviously. Depending on what is driving on Monday, Tuesday. But if not, and we see a breach of this, then obviously we have this, which is this juicy ass wick over here, which is decent 150 plus wick. And yeah, obviously that'll be a nice backup because I'm not waiting. How many pips is that? 300 pips for the next level. If we see a strong move in on Monday, that's 150 pips to level. Breach of that, that's 250 into this. Of course I'm going to take that. And bang on the 0.8 level. That's beautiful. So yeah, we'll see what happens. I'll set an alert. So that's nice. And then, oh yeah, we also have this now as well. Obviously I wouldn't take it today, but that is a wick that you cannot not trade. I guess you do also have that. So you've got a few to look out for now. Let's see if that 61. Yeah, 61. If we break, oof, we could have a few. If we do break towards this and see a nice bounce off this, then we do have the 38 and the 50, which are both really nice. This one's going to be a bit awkward for stop loss. No, it's not actually that bad. No, it's actually okay. So we can have like three separate trades here, and it's not actually that bad. So that could be a very, very, very nice situation there. Hopefully that plays out. But yeah, obviously I wouldn't take that tomorrow. I'd want price to at least come towards these lows before even thinking about that. And 23. If you take one, you need to take both. Yeah, of course. Yeah. I'm not going to take this one, but then not take that one. The break retest. Yeah, no. But if we pushed all the way down here and pushed up, then yeah, sure. But if we had a reaction off of this and came back to it, I don't think that's enough of a move below this level to take that break retest, personally. But if we did a decent move and it carried on with the break, because obviously it's kind of closed at level, which is a bit shit. Yeah, it's not too bad of a break, to be fair. But if we just came to this and then pushed up, yeah, I'd go for that, but I wouldn't go for this. But if we push pretty low like that, then yeah, sure. Just with, obviously, I don't like taking a super aggressive break retest. Unless we've got a really strong trend. Which, I mean, I guess we kind of do, but it's nothing amazing. But yeah, no, I get what you're saying. Okay, UJ. I think UJ is going to tap into that level before GJ, right? We do have like this as well on UJ. UJ missed the break retest as well. We have this, which is 50-ish away. 50, and then you have that 160. So, I mean, which one's going to react first? UJ's stuck at, this is a big ass zone for UJ. UJ 100 pips away, GJ 130 by potential match. Which is only looking at UJ for 100. Are you talking about that? Yeah? Monday I don't like trading. Yeah, neither. Monday morning at least I don't like trading. I'd never take a trade like Sunday night, Monday morning, early morning. Once London is kicked in, then I would maybe take a trade. But I'd rather wait for New York, obviously. Hello, YG. How's it going, man? Wow, I've not seen you in a while. A long while. Oh, that one. Wait. You're saying this one that's 100 away. Wow, okay, they look completely different. Mine's like 180. Oh, the 61. Oh, shit. 61. Oh, okay, you're looking at the fib. Ah, okay. Yeah, I get you. Got you. You got that break retest as well. Yeah, that's fair. And that level, yeah, they're all valid. No, not really changed. I mean, yeah, I guess it has actually a little bit. Nothing crazy. It's just I can't even remember the last time I spoke to you, really, to do with the strategy at least. It's still like basic.
Year and a half, maybe.
Yeah, it's been a while.
It's been a very long
Um,
time. Yeah.
it's still like basic levels. With fib, EMA, market alignment, and correlations and stuff like that. Yeah, still very, very basic. It's not really changed much, apart from I'm a bit of a degen now, trading 4-hour and 1-hour gold, which is kind of fun. Yeah.
I'd say that's slightly an improvement, at least on my end.
Yeah, no, it's good. The stats are really good so far.
Good.
Yeah, how have you been? What have you been up to?
Really good. At least recently. Trades have been pretty well.
Okay, good.
Nonetheless, gold is gold, man. Always trading gold. Nothing new, to be quite honest. Are you
still trading your psychology stuff?
Yeah, still the same. Just no lessons now. Just doing my own thing and helping out. That's all, really. But it has been a very, very long time. Very long time.
Yeah, it has, hasn't it?
I left you.
Yeah, I remember you breaking down your strategy. It's probably one of the most interesting strategies I've seen.
Very interesting. But it still remains the same. I think we're more on the quant side of things now, using a lot of probability and using.
What's the strat? Can you explain the strat in 30 seconds?
We're looking at the World Economic Forum and then using their theories and then the probability provided by them. After we've been given that probability, we use news to basically deduct the amount of chances the market should be going to the upside or the downside. And then that's it. We're just waiting for news to play off of whatever goes on. Again, we're sticking on the 4 hours, using sessions. After we've used sessions, take the trade, and we just follow the trend, really.
So can you explain that in English now?
Oh, okay. Economic forums. They post a lot of theories. So there's a bunch of quant analysts and whatnot, and they post possible results. And you basically spend however long you'd like to find a possible result that fits your strategy. You remember the algorithm that we use to trade and whatnot. You stick to a very specific time frame, and you basically look at some form of specific news, use the volatility index or the volatility 3D, whatever you want. You see it and you follow whatever trend. Like really depends on market sentiment too. Sometimes you'd have maybe 3 or 4 times a week the market will go in the given direction at the same time, whatever, and you follow that every single time. Sometimes it'll work, sometimes it won't. Obviously we can't have 100%, but it's possible. It's possible if the sentiment is in your favor. In the end, you're looking for basically when the contracts end, you're looking at premium and discounts. After that, it's kind of just, hopefully it works. Win rate, I'm sure Leon can definitely vouch.
If I remember.
Yeah, I think for 6 months we did have 100% win rate, and then after that, obviously, it did diverge. It went like maybe 80-90%, give or take, depending on sentiment. Again, it is what it is, really. It's never waffle. No, it's been a while. It's been a while, definitely. I mean, we did have a hedge fund for a while. Was it just a micro hedge? Tried, failed, but I think that's just part of the game.
Yeah, I remember that. That was a fun little journey.
Very, very fun little journey. But we did end up with like 150k left in the end, and we just chucked it in gold. There was nothing to do, and we did eventually break even in the end. Thank God.
It's like Leon talking about journal again. Wow. That's an insult, by the way. That's not a compliment. I like to blabber on about my Google Sheets journal and how much I put into it.
Oh, that's fair. I think I've kind of gone off of journaling now. Simply.
Yeah, I mean, it gets to a point where, once you know your strategy inside and out, unless you want to collect data and refine the data. But there's only so much
Yeah.
refining you can do.
Exactly. I think in the end, again, it's just psychological. That's all.
That's true. I knew he'd go when I saw the profile. SpongeBob go for real. Hell yeah. Hell yeah.
Oh yeah, we took the NFT off. No more custom NFTs and whatever bullshit.
Have any of you guys got anything on Sexy GU? I've got the 61, which is looking pretty nice, but the 38, I'd need a breach of that. I don't really want to go for that one.
Oh, let's have a look at the GU.
That's about it, really. The cells, I can't be asked looking at the cells yet. Oh, here we go. Some charts. Let's have a look. Oh, you got the exact same. Nice. And you got the exact same. Okay, perfect. Norman, let's see. Oh. Fuck off. Okay, we're going to keep it like that. You don't have any of the buys? Don't trade much for... Oh, okay. Oh, you literally said right there. Okay, fair. I mean, yeah. I can't bother marking up the cells yet.
See, that's one interesting thing. Sorry for interrupting.
Go for it.
You know you're looking for some form of resistance at those levels. Why do people not long those positions up until those levels? And then when you have any form of resistance,
because then you're basing it on just thoughts and ideas rather than actual confluence.
I get that, but I mean, you have your structure given there, and you break it down with whatever levels you want, BOS levels, whatever, support and resistance, doesn't really matter. And you know that the general structure is going in to the upside. And the next points you're looking for, the resistance.
But then, like, you're basing the strategy more about, like, structure and general direction rather than we're waiting for, like, how the strategy works is we're waiting for, like, zones where we have the highest probability of a move. We're not waiting for like a move into that. We're waiting for these zones where we have multiple confluences all stacked up with probabilities. So we're looking for at least like a 30 pip move from one of these levels.
Yeah.
Because if I just took a buy towards that, I have no conviction that it's actually going to go up, but I have conviction that it's going to go down once it hits this level.
Oh, that's pretty fair. Okay.
Leon, on mute. Okay. Unmute. Oh, sorry. Here you go. Go for it, Norman. Go for it.
Bro. Thank you for giving me the privilege to speak, bro.
You're welcome. Sorry, no, it was making some weird noises before.
Oh shit, my bad. How you doing, Wolf G?
I'm doing just fine, thank you. How are you?
I'll sit back.
Good, man. The reason, especially because me and Leon, we trade similar strategies, the reason we don't buy and hold into a level, because we don't understand fundamentals in that depth, and the strategy is based on, like, all the zones are identified, like, just separately. They're all based on technicals, and you only enter a zone when the odds of profit taking is high. So where profit taking... Oh shit. I'm sorry, I'll move away from my mic. I'm actually...
You were fine.
But yeah, so what makes a zone have higher probability of a pullback is if the zone before is breached, meaning if people didn't cash their positions in one zone, they're likely to cash in the zone after. If it's not, so that's at the very minimum criteria for me, a breach of a zone. If not, then it's timing or alignment. And timing, not all end of session opens, more so if Monday, Tuesday, you're very bullish, then Wednesday, end of session, there's a good chance of that pullback happening. And the strategy, I think, because we all trade very similar, the real answer is because we don't understand it in enough depth to be able to anticipate these larger moves, because a lot of it is the perception of fundamentals. It's not just what the results are, it's how big money perceives that result. But it can be traded in a way where you just leave a 10% runner, because fundamental drives price, but it always goes off tech. And retail tech is good enough to... So basically, you cash on a profit-taking move, you leave a runner. If you have a better understanding, you leave bigger runners, and maybe like the GU lows 1.21, that is a technical zone, and you could have caught that from retail. If you got into that zone, you leave a 10% runner, then you do have runners one way. And if you have that fundamental bias, then you leave more runners in that direction. Yeah, that's it.
Do you mind elaborating on retail? What do you mean by retail?
Basic support resistance. Like, not trying to trade smart money concepts, just fibs, key levels, trend lines on a higher time frame.
Okay. I wouldn't say retail. That's what retail is. I think we're all
Basic supply
classed
and
as.
demand.
Yeah, sure. I mean, that's a strategy not aligned with retail. Retail is literally just industrial level trading.
Yeah.
And also, do you mind elaborating on like the cash thing? What did you say about cash?
What the profit taking.
Yeah.
So if a zone doesn't deliver a pullback, the odds of a pullback at the next zone is higher,
Oh
because
yeah.
if
Okay.
people don't and like it's not like to say every single technical level will deliver the move, even if you're against fundamentals. If think of it as like a metal ball, and all of the technical zones are it's like glass, and if
Yeah.
there's momentum strong one way, it might take more glass levels to stop the momentum, slow it down. So for us, it's we don't take all of them. It's only where you breach the zone where then if it's an example would be, I'll give you a good example of on the charts actually. Give me 1 second.
Sounds very similar to something that
It's
we have. It's just buy and sell pressure. That's all. Understanding best bid and best ask, how an auction works, basically. And then those levels, what you've marked out, those highs and lows, whatever. Those are
So-
basically points of resistance, whatever.
Yeah, so this is GJ from around 2 weeks ago. This is a good example of where you had all the additional things on top of technicals. A lot of this strategy is based around logic to anticipate what big money would do, or what the majority of the market participants will do. What a lot of people get wrong is they try and predict, oh, big money is going to do this, or they're going to do this. You don't know, because there's a million different things pulling at price. But what you can do is you can anticipate what the majority is likely to do. So this zone, which I've highlighted a few times, so you know which one I'm talking about, and the one that Leon's highlighting as well. So this trade for the day, it was Wednesday, we had a 300 pip move into so the zone was identified separately from everything. It was simply just a technical zone. I think it was a double fib key level. It had the EMA. So you've got a technical reason where price can go off. It doesn't mean you're trading it just yet, but also you had a 300 pip move into the zone. So for that day, if you're coming towards the end of session, the odds of people cashing their positions is high. But also for the week, you're up 550 pips for the week. So there are a lot of people that have unrealized gains that they're going to cash, especially it being a pound pair end of London session. You've got timing, you've got tech, and you've also got UJ, which was on a fib coming close to a trend line. You had EJ, which was on 61 fib and a key level. And on top of that, so for me, I'm trying to understand the fundamental perception. I don't always get it right, but you can still get an idea that this push up was driven by dollar CPI. CPI came higher. It wasn't a strong beat, it was a beat overall, which increased the likelihood of hikes. And if the interest rate differential, so the difference between the yen and the dollar interest rate is the most apparent, yen is ultra loose, very low interest rate policy, and dollar, US dollar has a high interest rate already, and now because of CPI, there's a higher anticipated or higher likelihood of more hikes. So just an overall, the perception of interest rates is a bit higher. It makes sense because it caused yen weakness. And yen index also came onto a technical level. So maybe you don't understand exactly what's happening behind the scene, but you can get into trades where even if this trade, let's say the momentum was against you, it would have done that pullback move, that initial pullback that I did on the day. The following day, it pushed a bit higher, and then it went on to the EMA. It was London Open. So again, you could have entered again deeper into the zone, but it's more so just, it's a very systemized way of doing it, trying to just find areas where the likelihood of that pullback is higher. You get in and you cash on the initial pullback. So that pullback that was going to happen that day, even if the momentum kept pushing price higher, it would have done a pullback and then carried on going higher, because you're up fucking 300 pips for the day, end of session, all the yen pairs are on level, yen index is on level, everything is on level, and it's kind of like mean reversion. It's a very overextended one way. It's not sustainable, especially in the short term. People are going to cash their positions. Some are going to realize the unrealized gains. Some are going to close their positions and losses. Whatever the case is, it's like everything lines up. But this is a very textbook scenario. In other scenarios, you can take a trade without timing or alignment if it's a technical market. If it is even if a 200 pip move sometimes is good enough. If there's no fundamental driver, the only reference that you do have is technicals. But yeah, it's kind of and how most people do it is if you don't, and you can trade this without even understanding fundamentals. But with fundamentals, you have more of a mid to longer term bias, meaning you know whether to favor shorts or longs. And if you favor longs, you'll just hold runners, biggest portion of the runners. You never cash less than 50%, because worst case scenario, if you're going really aggressive and you cash on the initial pullback, it's just break even essentially if it hits stop loss, but it still gives it that breathing room. But how most people do it is they just play defensive. So if they know there's a news event, they want at least 2 levels to be broken, where they might miss out on a zone, but at least when they do get into that zone, that profit taking is pretty high.
What time frame are you expecting them to break these levels?
Daily. So I first start on the
Okay.
weekly. I plot all the most obvious levels, then go down onto the daily. Very rarely I even go into the 4 hour, but it's all higher time frame, because sometimes you do notice on big significant levels, either price will make the move a bit early or it'll make the move a bit later. Rarely you actually see it bang on the level, unless it's like bang on 4 o'clock, but then you've got timing. So you get in early. If everything else is on level, then you'll get in a bit early. And a lot of this strategy is you never take it on a level anyways. You look at recent price action and you go a bit early anyways. Yen pairs likes 0.2, 0.8. So if there's a key level at 0.9, you'll go 0.8 so you don't miss out. But yeah, it's basic fucking tech, to be honest. It's just very few refined variables. Fewer variables which have just been really refined.
Fair enough.
Can you repeat all that, please?
Can you repeat that? Is great. What is your perception of fundamentals, though? You did keep mentioning that.
So even the person I learned from, I don't know if you know Seb, but he says the same thing. It's market does, to a degree, it will react to the data, but it more so reacts how big money or how the majority of the market participants will perceive that data, how they'll perceive how this data will affect the future of the monetary policy. And that's why in that example that I showed you on GJ, why did GJ push up when it was a dollar news event? Because that dollar news event increased. Basically, inflation for CPI dollar has been going up for the past few months, and with a beat overall, even though it wasn't a strong beat, it was a beat on month over month, year over year, excluding food and energy. So overall, it's showing that inflation is sticky. Longer term, since around like near the end of 2022, inflation has been coming down, but for the past 3-4 months before that, it was going up. But with that beat overall, in longer term, mid to shorter term as well, so month over month, year over year, it shows that it's stickier. And if it is stickier, how does it control inflation? They increase they hike rates, and if they are going to hike rates, then it creates the difference of the interest rates from the yen and the dollar is more apparent, and investors favor holding dollar compared to yen. That's why you saw yen weakness. So even though midterm, like initial reaction of high CPI pushed gold towards the downside, and even for gold, you can say there was hedging, you can say it was because of geopolitical tensions, but gold is seen as an inflation hedge. So when I was looking at a gold buy, I had a gold buy at the same time, and that did miss, but I wouldn't have been scared to take it, even though it like, you know, some people with the strategy, they'll play defensive, they wait for a breach. But I know if I do get in, it's probably going to work. It's not likely gold is going to keep going down. If inflation is a beat overall and it's been uptick, it can potentially even spark a risk off market. But more so, gold's an inflation hedge. So if my level does get smashed, the backup is likely to work, but it's likely to go up. But that missed my zone. So sometimes what you'll notice is how I say it to people is, have you done economics, by the way, in uni, or do you know anyone that's done economics in uni?
I have a friend, yeah.
Unless they're clever, but a lot of people who do economics in uni don't know how the market actually reacts based off it. I know someone, he's not done any, he's doing a dissertation, whatever the fuck that is. I'm a college dropout, I don't know about all this shit, but he understands the textbook definition of fundamentals. But fundamentals is not, and that textbook definition is the lines. Market will react, you have to read between the lines, and I think between the lines is what I talk about, as in the perception. It's knowing how big money perceives that, how the majority, or you know, the smartest people in the world, how they'll perceive this news event. And sometimes if it's like normal conditions, it can give the reaction, but it's more so just the perception. But yeah, that's what I mean about it.
Fair enough. Can't really.
It's nothing
complain there.
complicated. It's nothing complicated. It's just fucking normal, basic levels, fibs, trend lines, and then yeah, with all the shit in the mix.
Okay, so you wouldn't say you understand in depth to a certain extent.
Not necessarily.
Just a
I've
little bit.
been yeah, I don't think I even understand fundamentals, because with fundamentals, well, I do understand it, not in that depth, because fundamentals, Leon said a very beautiful analogy of it. It's like a spider web. You don't know what's pulling the strings, or you don't know how one news event can pull the string of another, and like, you know how it can, it's a domino effect, and you don't know how the majority of the participants will perceive that. So a lot of the times, sometimes it's easier, and you can also combine it with, let's say, if you're looking at gold, and already gold, technically speaking, is overly inflated. Technically speaking, even though it might actually be how it's meant to be, you can say it's way too
You're right.
high
You're
compared to what it is. And we, in terms of technicals, you have no reference apart from psychological levels. But in terms of fundamentals, now let's say if you have a news event and there's a zone 200 pips away, regardless of that news event, you can look at risk sentiment. If you are already in a risk on market, meaning investors are favoring riskier investments, money flows out of gold and out of safe havens into stocks, so stocks going higher. And that means gold is favoring downside because of the risk environment. You've also, it's all overly inflated coming into technical levels, which, since you've got no reference, like it's at all-time highs, the only reference you can have are either fib extensions or trend lines. And for me, I don't even bother with both of them, because psychological levels is good enough, because gold works really well with psychological levels. And you can look at the charts and you can see when it goes past all-time highs, it most of the time it always goes off psychological levels a few dollars before, so you don't miss. But so you've got risk on, you've got if, and then let's say you get dollar news, and that dollar news is weak for the dollar. Now you have to, even without a deep understanding, even fucking a monkey can, well, with a bit of knowledge, can see if it is a huge discrepancy, or if it's, as long as there's nothing major, it's likely to be digested, and it will continue in the overall, like wherever the market was heading. It's a very short-term reaction, unless that short-term reaction causes a shift of that big money to maybe think that, oh, this is going to cause them to change rates, or whatever it may be. Like an example could be the Fed, the dot plot in December. I think that's a great example of perception. You know, when they released the dot plot, even though they're hiking, and when you do hike, gold goes down, and gold did go down, but so that hike caused short-term downside. But because the dot plot, it's now you're anticipating 2 cuts instead of, I forgot however many. It's that discrepancy of the anticipation. The market is all speculation, so it's just understanding what the current market is speculating compared to what it is likely to speculate based on the data. Yeah, I'm trying to understand fundamentals in more depth, but I think it's not even rocket science. It's just repetition.
It's
like
not, it's not needed either.
Yeah, no, but it does help.
It does help, of course it does help, but like, again, I'd say majority of the market is literally just psychological problems. That is literally it. The market by default is a given 50-50. And the more you extend yourself and the more you learn about the market, the harder it gets. You're making it difficult for yourself.
I've made that mistake before, and a lot of I've seen a lot of people make that mistake as well. And
Exactly.
whenever I'm helping someone, I always show them key levels first. Bro, you can plot fucking horizontal lines, and all of them will work. You can have like an 80 plus, you can plot have over an 80% win rate with just levels. But the reason, but the reason why I'm trying to get a deeper understanding of the fundamental bias is because I know right now it's very easy, but imagine you're trading live capital and you're risking 10-20 grand on a single trade. Yeah, you can still do it, but I would like to have, you know, an overall bias of the markets. It helps with that decision making. And even though I can trade just key levels, the reason I use other technical confluences and alignment and all of these things is because I trade less, but the trades that I do take have a much higher win rate. And even that win rate can be refined. I'm at around like 80, 85 win rate. But that, with the trades that I've taken, can, even the same trades could have been improved, it could have been better, just based on the execution, based on, because whenever you take a loss, there's always telltale signs on the market giving you clues, and you could have always avoided it. And for me, less is more. I'd rather take less trades, put more money on them, and yeah, so you just it builds confidence in the trades that I do take, I guess.
Yeah. At least for the trades that we generally take, it is just off of the lines, just off of levels. There are obviously some background news that we go through, going
Yeah,
through
100%.
contracts, going through payments, going through fucking anything really, volatility, and it's just anything that gives us the general idea. But it's always off of the lines,
Yeah.
either above or below. It's never directly on the lines. You still need to give some excuse for exchanges and for volume and for liquidity, basic things like that. I mean, do you understand why the lines work?
Yeah, because institutions and big money, they're not looking at fibs and turtle soups and all this random shit. Key levels is king, and key levels is the foundation to all of our technical trading. Leon's, mine, everyone in the servers, and I think, but trading is one of those things. It's each to their own, and that's why, as much as I talk shit about smart money concepts, they do work. And I say it just to piss people off, but that works because what they're trading is they're trading manipulation. They are anticipating when they only will find a trade when market manipulates one way, and they've learned to identify different characteristics in different times, maybe, and they don't understand how it works or why it works. They just know based off the tech. They know when on London Open it sweeps, it breaks a high and then it has a fake out and there's a change of structure and all this shit, then it's likely to go towards the other way. And they've just understood one characteristic of the market. But as a general, as a whole, people are looking at key levels. Key levels is the foundation to everything. And there's different ways of trading key levels. Some people do lower time frame, higher time frame. But for me, daily, weekly key levels all these other things, they just kind of identify what level is stronger. Like fibs work as well. Fib 38, if you know momentum is one way, you hold the fib 38 back to the highs, or if the 38 works, you wait for a breach of the 50 to increase the appeal of the 61, because if the 38 worked and the 58 was a breach, that means the 61 is like the last leg. But if 38 doesn't work, then 50 is likely to work. And and that's the same concept as breach of one zone to increase the appeal of next one. Let's say if there's a fib and there's 10 billion allocated to that, 10 billion worth of sells, closing positions, orders, or whatever the fuck. If they're not cashing their positions at the 38, then that means the rest of it is all allocated between 50 and 61. So it's just using these little things to improve efficiency. But yeah, key levels is the foundation of everything with all of our trading, I think.
Leon, doesn't he remind you of Omar? He reminds you a little bit of Omar.
You think?
At least I don't remind you of Liquid, bro.
Omar's a good man. It's a compliment, don't worry.
I've not spoken to him in a while.
Hey, have you not?
No.
I speak to him every day now. Okay, I mean, the general idea behind the levels is you have quant analysts, okay, and you have institutions, you have big banks, whatever you want to call them, and they are not sat there trading those positions themselves to a certain extent.
Yeah, they've got algorithms.
Yeah, exactly.
But even algorithms, they'll trade levels, but and algorithms trade lower time frame as well, and that's why the breach of a zone to increase the appeal of the next one works really well.
Of course.
Because if the algorithms didn't take positions in one zone and it goes to the next one, it's also why if there's a sharp move into a zone, why you should take it. You shouldn't be scared, because that move will still happen. Just because price is falling like a knife doesn't mean the profit taking move's not gonna happen.
Yeah, of course. And then the general idea behind that is following the positions on news. So how we use it is we have those levels, we follow those levels, and we know that at those levels, you have your bots, you have your algo bots, you have your quant analysts, whatever you want to call them, and they can see those levels and they will respect those levels. They put it in their little code that at these levels, price will do this, whatever, blah, blah, blah. If so, move the market whatever direction, buy or sell, who knows. The only time we make it something different is when we have some red folder news and we expect that market manipulation. That's when we start trading at a very, very specific time, and when that news comes out, we know what that news will do, and that will drive the market in whatever direction. could be, let's say, up, and we will know that from the given news. And then we enter our position off of that. After we've had our position, we exit the market, and that is one trade, maybe a week, if not a month. But that trade makes up a lot. I'd say in terms of percentage and profitability, it makes up a lot of the hedge or community hedge for that sake. And so that is where we lie with our trading. Is obviously we don't have a high frequency in trading. There isn't many trades that happen, but when we do trade, it hits, and that's
less is more in it.
Exactly. And so that's it. Obviously, people expect like within maybe 100% win rate or 90% win rate, you're expecting a lot of trades, but no, not really. Maybe 10, 12 trades a month is way
even
too
that's
high.
a lot for me.
Yeah, exactly. But then when we say, okay, we've traded maybe 10 times this entire year, you know, it sounds a bit odd, but the profitability is
100%.
there, and
Yeah,
the
but
results provide.
realistically, if you're going to be risking 10, 20, 30 grand on a single fucking trade, you're not going to be trading all the time, because you will end up slipping. And in trading, if you slip, it's a very slippery slope, and you go down that rabbit hole, it will fuck with your psychology. You'd rather just...
For contract prices, it's never that low. Like the frequency we're trading at least if it is going to be once a month, it has to be a lot more than 30 grand. And it's aiming maybe half a mil, if not more. And obviously it goes further than that. It depends on how far we want to generate our risk. And again, that always changes. I would always say if you are trading a personal account, you have